thank them wholeheartedly, National Commercial Bank, NCB Capital Markets, and the Jamaica Stock Exchange, and to our presenters from both institutions, excuse me, Sherry Martin, Head of Retail Banking and Group Client Experience, and we're expecting Anya Walker as well from NCB Capital Markets. Acknowledgement to our presenter, our main presenter as well, Don Anderson, Executive Chairman, Market Research Services Limited. This is the 20th year that we have been presenting the Business and Consumer Confidence Indices release. We started in, if my memory serves me right, second quarter 2001. So congratulations to all who have kept this ball rolling for the last 20 years in providing meaningful information, valuable information, and discussing solutions as we continue to propel our country forward. To our panelists, our special panelists today, Mrs. Marlene Street Forest, Managing Director, Jamaica Stock Exchange, Ms. Gloria Henry, President, Global Services Association of Jamaica, and of course, Oliver Townsend, Chief Executive Officer, Knutsford Express. We will go through the presentations and I will allow the participants to post their questions in the Q&A section. So at any point during the presentations, if you have a question, you can just type it in and I will select them. We're trying to get through so that we can leave some time at the end to field some of the questions to bring further clarity to the Business and Consumer Confidence Indices. We're all highly anticipating the results here. It has been a difficult time for us, and the consumers and the business persons have been doing their best to survive, and we hope that hopefully Don will show that in his numbers. So without any further ado, I will ask Mrs. Sherry Martin, Head of Retail Banking and Group Client Experience, a long-time attendee at these events, first time in a long time as a presenter, to welcome her back to the podium to present some remarks on behalf of National Commercial Bank. Good morning, Sherry.
Good morning, Andre. Good morning, everyone. It's really good to be here this morning. I hope you're all doing well. NCB is very proud to be a part of an initiative like this. I don't mean to steal Don's thunder, and I won't, but certainly from what we've seen, you're going to hear more from him in a short while, but we're seeing consumer confidence definitely increasing as is the business sector's confidence as well. And we believe that the increase in the current economic conditions due to positive consumer perspectives on business conditions and jobs, is largely predicated on, seeing the economy opening up. We're seeing purchases remaining virtually, unchanged, but there's an expectation for income gains. We're also seeing the need to continue to be vigilant around the spread of the virus. It does remain a top priority. We're seeing where, curtailed movements continue to be the most widespread impact of the pandemic and of COVID-19. And so a heavy reliance on mobile devices during this time is not unlikely and not unusual. And in fact, we welcome it. On the business side of things, as I mentioned, we are also seeing, and as I said before, Don will expound, increased optimism about our current business conditions. However, there does remain some uncertainty about future business conditions and expectations for the economy. We're also seeing an increase in a number of businesses contemplating new investments, and that's very encouraging. We do, however, see businesses strategically considering their costs while meeting their goals. So there is some amount of hesitancy in our interactions with our customers. They are seeing the signs and they are very encouraged, but they're still moving with a certain level of conservatism, and that's understandable. However, most are seeing a recovery in the short term, and they believe they will obviously survive the effects of COVID-19. And so we see where, there are signs of improvement towards economic growth and sustainability. We're also seeing, very interestingly and very optimistically, more adaptability to digital platforms and solutions as a new method. And you could say it's not new, but it's certainly more on the radar these days, a new method of transacting business generally. And so we're seeing positive impact on key sectors such as tourism, entertainment, distribution, and transportation. And so for us at NCB, we believe we need to continue to be adapting to the dynamic and customer-focused approach in the market. And so supporting all our consumers and business customers as they navigate, the current climate and work towards positioning themselves for the future. We are there, and we're right there to help them. A number of them are looking at self-service platforms as a way also to reach their customers and allow their customers to get their products and services. And so this kind of notable increase in business activity, certainly on the digital side, looks at areas such as payments, which is, a main mode of activity for businesses. Exchange for goods and services would involve payments. And so we are taking a very proactive approach in terms of further digitizing our solutions so that self-service, digital transactions can continue to be an increasing mode of how we interact with business and consumers, and them being able to distribute their products and services. And so you're seeing more solutions such as person-to-person payments, we call it P2P, mobile transactions, contactless payments, the whole emergence of digital wallets, which we're very excited about. We're also seeing more and more businesses thinking about artificial intelligence and machine learning as ways to harness data that allow them to understand their customers better. And in turn, understanding our customers better allows us to meet their needs and find solutions that are right for them in a different environment. Our goal is to support, obviously, as the nation's bank, businesses with financial tools necessary so that they can emerge stronger and position themselves for the future. We have a toolkit of products and services. There's one that we call NCB Business in a Box solution, and that provides a wide range of e-commerce payment solutions tailored for all business sizes and types, importantly with affordable access and rates. Interestingly, no website needed. Business typically, hit upon a barrier, if you will, when they think about having to transform to more online interactions. Do I need a website? Where do I go? What do I do? With a business in the box solution, that's not a consideration. We take that off the table for you. We're also seeing the increased use of social media space as a means of transacting and doing business. And so through social media payments with payment buttons, we're also being able to provide businesses the opportunity to meet their customers where they are, and many of them are, in fact, on social media. The traditional ways of interacting, such as point of sale solutions, we're not unusual or unfamiliar with mobile point of sale solutions, but these allow for contactless, anytime, anywhere transaction processing. We've also recognized the need to revamp a number of our savings and lending solutions or investment, as I said before, deposit and credit solutions for businesses at a time like this. Unusual times on call for unusual measures, and our ability and our willingness to consider the context and revamp our product offerings to suit the context so that our customers can continue to thrive means that we will make sure that they are empowered to do their business, and consumers are able to access products. And so that's also part of the consideration that we're seeing. And so all in all, I think it's important that we reaffirm our commitment. Our commitment now more than ever is to cutting edge digital first products and solutions. We also believe introducing cost-effective payment solutions built on reliable technological foundations will allow our businesses, and by extension their customers, to continue to never miss a sale as business activity increases and the economy recovers. So those are the considerations that we start with this morning as we look forward to what Mr. Anderson is going to tell us. And we are here to support our consumers and businesses, and we stand more than capable and able to empower them to unlock their dreams and to go forth and thrive. Thank you.
Thank you very much. Thank you very much, Cherie. Thank you, National Commercial Bank, for your continued support. I see Anya Walker online. We have Anya scheduled to bring some remarks on behalf of NCB Capital Markets. So Anya, if you're there, you could just unmute, and I think you should be able to go ahead now.
Hi, everyone. Good morning.
Good morning.
The technology, I tell you, sometimes it doesn't quite work as it should, but I'm here and I'm happy to be here to share with you my presentation. My presentation is going to focus on business and consumer confidence and the outlook for the capital markets within that context. And within the context of the theme, has the recovery started? So when we plot the JCC indices, the combined index, the financial index, and the manufacturing index against confidence, we see that there continues to be a strong correlation. They continue to move together. The indices will have improved to in line with the consumer and business confidence from their lows in Q3 2020. They're also up quarter over quarter and year over year. And I believe that, and not to preempt Donna's presentation at all, but the indices would have shown that businesses are more confident about, future earnings, as well as, more businesses think that it's the right environment to invest. Consumers are a bit more confident about the prospects for jobs, and we see where that is filtering over into investor sentiment and the market. The market is still well off its peak, but it's certainly doing better than its lows of last year. And we believe that, the trend in consumer confidence is mirroring what is happening in the overseas market, where buoyed by high vaccination rates, unprecedented fiscal stimulus that has increased spending power, and just the general reopening of the economy, that those factors will contribute to an improvement in confidence locally. That's what is going to drive consumer confidence going forward, just that return to some sense of normalcy. And, so those are our expectations. As we look to the recovery, we see certain themes in the capital markets going forward. Alternative investments as an asset class is going to become more prevalent, whether it's real estate, private equity, infrastructure funds, distressed debt. They're going to become more commonplace. And this is happening as securities dealers are trying to give investors better returns within the context of historical lows in interest rates. Interest rates, I don't think, have ever been this low in Jamaica before. So your return on your traditional fixed income investments are not as attractive. And so as a means to give investors better returns, we're going to see more of that. I think Signals would have opened its IPO for its real estate company. NCB Capital Markets would have launched TRIP, coming off last year's launch of another fund, and its infrastructure fund. Plans are afoot. JMB also has plans to launch a private equity fund. So that's where the market is going. And what we expect is that, it's going to be a significant driver of new equity listings, because the fund managers are really trying to leverage the equity markets to improve the attractiveness of what is typically an illiquid asset class. And by listing, what it will allow investors is easier entrance and exit in the asset and increased overall attractiveness, because we've found that our investors like liquidity. The private debt markets will continue to improve, both as a traditional source of financing, refinancing, and for general new investment opportunities. With respect to the capital markets, one of the themes that we anticipate is the move towards rating. I think corporate debt rating will become, more commonplace, especially as the ratings offer, the companies the opportunity to reduce their funding costs because it brings greater transparency and price discovery. And we feel that blue chip issuers are going to be among the first to take advantage of this. And these changes are being driven, are supported in part by the BOJ's new requirements for deposit taking institutions, where deposit taking institutions are now required to hold, to satisfy a liquidity coverage ratio and to hold high quality liquid assets to meet any short-term requirements in terms of funding and to support liquidity in a stress scenario. We foresee to a secondary market for private debt issues. Private debt issues have actually been around for a while, but with the JSC private market, as well as the fact that investors are looking for liquidity, brokers are looking to provide that, and also to support, trading gains, we see the development of a secondary market for private debt issues as one of the themes that are gonna emerge or is emerging from the recovery and the post-COVID-19 recovery. The overall impact, I think, is that COVID-19 has accelerated some trends that were already existing in the market. And we anticipate that coming out of this, that we're going to have deeper capital markets through, a wider range of investment options, more market participants, and generally better liquidity, both on existing and new asset classes. In terms of our expectations for corporate earnings and the stock market performance is expected to continue to improve with the relaxation of curfews. And I believe that there is significant pent-up demand, especially for services, entertainment, just those types of leisure activities. And so, with corporate earnings coming off of record lows probably last year, we expect that you're going to have some base effects, and corporate earnings should improve year over year. So in terms of the sectors that should benefit, the services sector, transportation, entertainment, and tourism, the external environment is becoming more favorable as the developed markets, vaccine, the relaxation of restrictions that return to normalcy. The surveys are showing that, persons really want to travel. They're looking forward to travel. And so that should support activity. And if you look on the Google searches and the bookings, that is looking more favorable. Still not anywhere near the peak of 2019, but certainly improving. And, the manufacturing sector, we also expect to remain resilient. The theme of e-commerce and e-channels to drive efficiency and expand the reach and improve margins, we expect to remain. So generally, the external environment is looking decidedly more favorable, I think. The local environment with the relaxation of restrictions is also improving, but it's not without its risks. And the risks are significant, and that is being played out in uncertainty that we're seeing in businesses. Jamaica has one of the lowest vaccination rates when compared to any country or most countries within the region, our peers. If you look at the graph that we have here, we're under 6%, and even our closest next country in terms of vaccination rates, Bahamas and Trinidad, they're over 10% in the teens. The Cayman Islands is well above 70% in terms of vaccination rate. So we still have a ways to go. And, the new strains, I know we're hearing about them there. And in a population that's not vaccinated, well, you don't have high rates of vaccination. The risks are real. And I think that is going to play out. Those are going to be the main themes playing out in the markets going forward. Thanks, Don.
Thank you very much, Andrea.
Thanks, Andre. Sorry. I'm looking at Don here on my screen. He's the person that I'm seeing at the top of my screen.
Yes, he's rearing and ready to go, and that's why.
Yes, he is. He's next in line.
Right.
Certainly. Thank you.
good insight there in terms of some of the external factors, macroeconomic factors influencing our business decisions. So we now introduce the highly anticipated presentation from the Executive Chairman of Market Research Services Limited, Mr. Don Anderson, who will now present the second quarter 2021 business and consumer confidence indices results. Over to you, Don.
Thank you very much, Andre. We'll now go through the key findings from the second quarter's report for 2021. As you know, we're talking about the business and consumer confidence survey that we have been doing, as Andre says, for the last 20 years. I need to give you a little bit of background to the study. We conducted, in terms of the sample sizes, respective sample sizes, we completed 600 interviews amongst the consumers using a nationally representative sample of persons across the island. And we also interviewed 100 businesses representing various business sectors. This is the platform that we have used consistently over the 20 years. And therefore, we have a very long time series of data from which we're actually presenting what we have today. The fieldwork for the current quarter, we will see. And let me go to my screen here. We can see that we're talking about data that we collected between the April and June. So we're now, in fact, in July. So we've continued the process because we're in the field on a daily basis. And we're now looking at, for this particular report, data that we've collected over that 3-month period. We're already in the field for the third quarter. And we're, obviously are looking for some kind of credence to what we're picking up right now, because we are in fact looking at continuous data, and we do have a very good feel from the second quarter as to how the third quarter could possibly look. But of course, we have to wait for that, right? So the fieldwork, as we said, was between April and June. And here's what we're looking at in general. So what we find is that, what we have found is that in the second quarter of 2021, right across the two categories, the two sectors that we have looked at, consumers and in fact businesses, there has been an uptick. And neither Anya nor Sherry, you didn't steal my thunder. You actually complimented what I'm about to say, because you have in fact correctly represented the data. The second quarter in 2021 shows a significant improvement in the indices from the first quarter to the second quarter. But we need to make the point that despite this significant increase in the indices in the second quarter, as you rightly say, it does not closely approximate to the previous periods pre-COVID, where those indices were significantly higher than anything that we're showing right now. So that's a positive, but a factor which we need to be very, very cognizant as we look at the data. All right. So this is what the overall consumer, we're starting with the consumer, we'll drill down into the business sector. This is what the overall consumer data is showing. Good improvement over the period, but as we indicated, and we need to keep on reminding ourselves, nowhere near the pre-COVID indices. So I want to look at this a little bit. What are we looking at? The overall consumer confidence rose from a low of 120.7 in the first quarter of 2021 to 149.8. And that under any kind of measurement is a substantial increase and improvement in the index. Okay, as close to 30 points over the last quarter. But what does this do? This actually takes us back to the second quarter 2020 levels. So we're no better than we were in 2020 and substantially lower than we were pre-COVID, because the pre-COVID, over the period from the fourth quarter of 2019 to the second quarter of 2020, the average index for the overall consumer confidence was 180 points. So when we're now up to 150, we're substantially down on the past 8 or so quarters of data. Okay. So whilst this shows an appreciable increase over quarter 1 of 2020, it is no more than an indication, perhaps, that consumers are thawing after battering from COVID for most of 2020 and the first quarter of 2021. So we need to just bear that in mind and to contextualize all the other indices that we will look at against that background. So we're going to move to the second chart, which talks in terms of consumers' assessment of the current and expected conditions. Consumers' assessment. So the 2 different measures that we're plotting right here. Okay. What is important to note is that because of that 30-point increase in the overall consumer confidence, all of the sub-indices that feed into this overall confidence level go up almost to the same proportions, so that every one of them, and this is no exception, where we look at how consumers view current conditions and expected conditions, we find that there is almost a commensurate increase in those indices compared to the overall average. It drives that, in other words, the overall consumer index. So the index of current economic conditions moved by 26 points, close to the 30 overall, moving from 120 to 146 over the period. But again, this is nowhere near the average of 200 achieved between the first quarter of 2018 and the first quarter of 2020. So we're looking at perhaps about 10 different quarters, averaging 180. Where we are now is up to 146, which is substantially off, but much better than it was in quarter 1. Very important to note. So this represents a dramatic fall off over the extended period of 3 years in the way in which consumers view current economic conditions. But what about their expectations? Consumers have a much better view of how the economy is likely to pan out over the next 2 years or so. This is the kind of horizon that they tend to look at, the expected economic conditions. Okay, that index moved again 30 points from 121 to 151, representing one of the higher indices in the sub-indices that contribute to the overall index of consumer confidence. Again, the pattern is much the same, confirming that whilst there has been noticeable buoyancy between the last 2 periods surveyed, there has been no return to the pre-COVID optimism which was displayed by consumers. We're therefore, if you wish, experiencing a period of very cautious optimism. The indices for current business conditions and expected business conditions, we're still in the consumer sector, but this is how consumers feel about business conditions, follow the same patterns, however, not as dramatically different as the previous analyses. For current business conditions, for example, that index moved upwards by 11 points up to 83 between the first quarter and the second quarter. But this is noticeable that the difference here is negligible across the 4 quarters of 2020, where the average was 81. So where are we now at 83, index of 83, in terms of how consumers view expected business conditions, that is really panning out at about the same level as the entire 2020 period. So in effect, the experience from consumers' perspective has not changed 2020 over 21. The expectations of business performance over quarter 2 over quarter 1, again shows a relatively strong movement of some 20 points, as it reflected 118 points in quarter 2. So let's go down and look at what those are looking at. We can see current conditions, current business, and current jobs. What it is showing is that the biggest blocks are in those, certain in terms of current business conditions, the average. So there's no great feeling of movement in how consumers feel about businesses. But in terms of job prospects, which have always been low, again, consumers are saying we don't really expect a lot of jobs to come on stream. So there's a fair amount of reservation about their own future from a consumer's perspective. Okay. Same thing we're representing here in terms of expected business. We can see that, consumers are not quite optimistic about how the business is going to pan out. They believe that things are opening up, certainly the relaxation of curfews, etc. They firmly believe will improve businesses over the period. But for the moment, there's again a very cautious view about what's likely to happen in the economy and with regard to businesses. When we look at what they're talking about in terms of job prospects, again, pretty conservative. It has always been so. They're very conservative about how their own future is likely to pan out because of what's been happening and because clearly of the battering that they've taken as a result of COVID 2020 and what has taken place in the first quarter of 2021. But we need to remind ourselves against this background that there has been a significant uptick in our consumers' optimism second quarter over first quarter 2021. We need to hold that and we need to work on that rather than necessarily the long time series of higher periods, which is now making this number look not quite as good. But it is an improvement over first quarter, and we need to bear that in mind. Maybe it's the turning of the corner. We don't know yet. Okay. So what does that mean overall in terms of consumer confidence over the last 5 years? We can see that the peak was in 2019, 180, made reference to that earlier. And we're now down to a level which is far lower than it was in 2017 at 146.8. So it picked up 2018 to 165.9, up to 180 in 2019, but we're falling off in 2020, COVID being the factor. And we're just picking up a little bit, as that data suggests, in 2021. Early days yet, okay? So we wanted to zero in a little bit on the job prospects and how consumers view their own future. But this is very important. So how businesses are actually perceived as well. Consumers have never been overly optimistic about either current job prospects or future job prospects, okay? So before we get to the next slide, let's hold that for the moment. Consumers feel that new jobs are scarce and they do not really expect any material change in this statistic over any period of time. Current job prospects, for example, move some 9 points from 22 to 31 over the period, representing a really significant increase over the period of some 41 points. This on the surface is excellent reading, but when it is considered against a high average of 56 points between first quarter of 2018 and first quarter of 2020, one can readily see that consumers are really pessimistic regarding the current job situation and in fact their expectations. Do they expect the situation to change in the short run? Surely, when one compares the first quarter index of 79 with the second quarter index of 112, there has been strong positive movement. But the long-term comparison shows a totally different picture. The average for the period first quarter 2019 through to second quarter of 2020 was 124, with a high of 139 as late as second quarter in 2020. So that an index of 112, whilst representing a very strong positive change quarter to quarter, quarter one to quarter two, really amplifies the point that consumer confidence is still fairly weak at this time in terms of job prospects and in fact, expectations of new jobs coming on the street. Understandably, therefore, consumers are very cautious about new spending patterns. We want to then look at some of the reasons why some consumers, very few, think that conditions will be better in the next 12 months. And we notice that a lot of it has to do with the vaccine availability, the opening up of the country, and a greater acceptance of what COVID is doing to us, which is a very peculiar way to look at it. But they believe the pandemic will go away. How quickly, nobody knows. And they haven't expressed any particular point of view from this perspective. But they believe that with the opening up of the economy, with the opening up of businesses, things will be better. And this is the reason why 42% of the persons that we interviewed from a consumer perspective believe that things will get better. But again, some people believe that conditions will get worse. And that one of the key reasons is the lack of employment, the kinds of situations that we're looking at here, the devaluation of the dollar, which is making prices and cost of living higher and higher, they feel. And generally, there is a reservation and a very, very significant caution in the consumer's minds about what's likely to happen over the short run. Consumers, of course, we know, look at things in front of their faces, unlike businesses who tend to look more long-term. So consumers are very, very responsive to minor changes that take place, because quite often for them, it's not a minor change. It results in significant price increases sometimes. And one of the things that we obviously looked at was the gas price increase, which of course is interesting that you don't hear a lot of comment about it. So we probably are very resilient and very accommodating in terms of what's taking place. But that's it from the consumer perspective. In summary, consumer confidence has shot up, but we want to caution about surging consumer confidence, because until we have a couple of trends of data which are in line with that kind of movement, we can't say it is surging. We say it did significantly move up over the period, but again, nowhere near it was pre-COVID. And therefore we are probably seeing a beginning of the turning of the corner, but the next quarter's data, which we eagerly anticipate, will tell us whether or not we are anywhere near that. So we need a few more quarters of data to be able to say whether we have in fact turned the corner and are achieving higher consistent levels of confidence amongst the consumers. We want to touch on the business sector now. And what are we seeing in the business sector? Business confidence moved significantly by 15 points from 115 to 130. And we need to note that this is the highest it has been since the third quarter of 2019, because we noted over the last couple of quarters that business confidence had been gradually eroded to a certain extent to a low of 115 in the first quarter of 2021. But we note a slightly different pattern in terms of the business confidence over the period, because whereas we can see from the consumers a very consistent pattern of change going almost going down over the period of the last 2 years, there has been a significant degree of fluctuation in business confidence over the period, right? Indeed, in the fourth quarter of 2020, an index of 128, which was close to 20 points better than the preceding quarter, gave rise to a feeling that business confidence was rebounding from the onslaught of COVID, only to see the confidence slip significantly to 115 in the first quarter of 2021. This makes a prognosis for the immediate future more difficult to come by. So let's look at what the specific indices that feed into the overall index look like. What are the index of current business conditions? We see in fourth quarter 2020, it was 132. But if you look at second quarter 2021, we can see that there's a fair amount of movement between the fourth quarter 2020 and the second quarter 2021, 132, 109, 100, 157, 146. So, you know, we can see that the business sector is, again, looking long-term, surely, but they also appear to be very responsive to changes that are taking place, because we're now seeing a fair degree of fluctuation, which we didn't see previously. We used to see a fairly consistent pattern running over a number of periods. Here we're seeing more fluctuation in terms of the confidence level for the business sector. In fact, we could conclude that across the various sub-indices that make up this overall index of business confidence, there has been a consistent fluctuation quarter to quarter, especially in the fourth quarter. What stands out then is that for the fourth quarter 2020, business optimism across the board rose noticeably. That period being consistent with the Christmas period, the Christmas quarter, which whilst nowhere as good as the previous quarter from 2018, or previous 10 quarters from 2018, was better than all others for 2020. In other words, we saw a spike in the fourth quarter, Christmas 2020, which gave rise to optimism that things were beginning to return to normal. But that optimism was dashed by the first quarter data in 2021. The second quarter 2021 represents what is hoped to be a resurgence of business confidence during 2021. So from that perspective, we anxiously await the results, and we have already, as we indicated, begun to track those. So first quarter to second quarter, we see a pattern consistent with the improvement in the consumer sector. So we will just note these similarities. So we want to look, therefore, at some more detail in terms of the current conditions, profits and investments, for example. We notice that businesses are reflecting some kind of volatility in how they view these issues. Most important, when we look at what they see current profits to be, 41.6% in this quarter say that profits were worse than expected compared to the second quarter of 2020. So we're comparing year to date. So we believe that businesses are feeling less bad, if you wish to put it that way. In second quarter 2020, 52% of the businesses felt that profits were worse than expected. But that fell in the second quarter 2021, where 42% felt it was worse than expected. How does that translate up the ladder? 10.7% felt in Q2 2020 that profits were better than expected. This has increased noticeably to 19.3% in the second quarter of 2021. So that there is a general optimism as we have seen in the second quarter 21. And this is very positive. We're saying we're hoping that this is the beginning of a turnaround in the situation, which is more long-term than the fluctuating patterns have shown over the last 5 quarters. But we need to bear that in mind, right? So just to show, current business conditions rose from 126 to 146, feeding into the overall business confidence. Expected business conditions rose from 110 to 124, feeding into the overall business confidence level. Current return on investment from 72 to 78, feeding into the overall improvement in business confidence, second quarter 2021 over first quarter. Expected change in the economy from 126 to 150. Expected change in firms' finances from 144 to 154. Expected change in profitability from 123 to 139. This was shown by that chart just now. But again, very consistent with the consumer perspective. In none of these scenarios is the current index close to the peak over the last 3 to 4 years. So that whilst there has been an increased optimism, we need to note 2 main factors. There has been noticeable fluctuation and that business confidence has not been restored to previous levels, despite significant positive movement since the start of the year. So we need to note some positives coming out of this sector anyway. And one is that 57% of the businesses feel it is a good time to invest, up from less than 50% in the last quarter. So there's a bullishness returning to the business mindset. And whilst in general, businesses indicate that they spend less on capital expenditure in 2020, this is a very important point to note, than they did in 2019, there were some noticeable differences across the sectors. And what are those sectors that were above average? Firms in the sectors that spent more in 2020 compared to 2019 were the SMEs, 60%, which is significantly above the average, say they spent more. But this is also reflected in firms such as insurance companies, firms in the finance sector, real estate, and in personal care, where 75% of these entities across the board, respectively, said that they were spending more in 2020 than they had in 2019. All right. So it's very important, therefore, for us to look at the trend in business confidence over the 5 years. And we can see that because of the increase in index in the second quarter of 2021, we are now seeing a picking up. Hopefully this is consistent and is maintained. But again, we're nowhere near the levels that we were in 2017, 2018, which was the peak over the 5-year period, and 2019 at 140. We're down in the 120s, and therefore, again, we could say that there has been an uptick, but we wouldn't want to say that business confidence is surging by any means. It definitely is not, but it definitely moved significantly over the period. What are the reasons why businesses say the economy will be better in the next 12 months? Again, it's not dissimilar to what the consumers are expressing. The pandemic will be under control, for example, most important factor. And therefore, because of the increase in the availability of vaccines, they believe that this will be a major factor in curbing any spikes or curbing the growth in the number of persons who are infected by this dreaded COVID pandemic. And we can see the other reasons. The one that we want to note is confidence in government initiatives. It's the least important of the five, but it needs to be noted because we have found that consistently across the business sector, they speak to a certain degree of confidence in how government's procedures and government initiatives are playing out. And I think it's important to make that point because they're buying into what government is doing in terms of improvements to the economy. So that's a very important factor. But some also believe that things will get worse. Increasing price, cost of living, and we can't, of course, ignore this instability of the dollar, which comes up consistently. Foreign exchange earnings will not rebound quickly. And therefore, we can see that businesses are optimistic that things will change, but a significant percentage of them believe that there are going to be factors that will inhibit that kind of change over the period. So we need to note these factors and take cognizance of them because they are in fact factors that will impact how businesses perceive the next period and how they roll out their operations over the next period. So we come to a very important chart that we have been plotting as we indicate here since 2019, because we always talked about the incidence of businesses that felt it was a good time to invest or not a good time to invest. But in 2019, we said, based on requests from participants and the audience, well, what are the sectors that are thinking in terms of investment? And we've been plotting this over the period. So we can see the changes over the 2-year period, 2019 to 2021. And, we can see in the extreme right column where the changes have been. Very important to note these because it talks in terms of the industry categories, industry types that are now more prone to investing and spending more money on capital investment and capital acquisitions. So this is a very important chart. And we need to just bear in mind that, we're seeing some positive signs here. We need to make the point again that businesses feel it's a good time to invest, 57%, moving up from in the mid-40s in the first quarter. And this is a very important point to note because it does talk to you in terms of where the heads are at. What's from their perspective, what is the climate now for business investment? And right now, the majority of the firms believe it's a good time to invest. So that's something that we need to take on board as a very strong positive. Okay. We can't end any presentation without looking at remittances. And it's here for good reason because remittances play a very important role in helping consumers to deal with their day-to-day existence. We can see this has never been lower than 33%. Now, there is a third of all consumers across the country, reflecting presence of various socioeconomic groups, various age groups, and so on, do indicate that they receive remittances from overseas. It fell in the last period, and it's probably the lowest it has been for some time, but it is still pretty much averaging about 35% of households that say they receive remittances. These remittances go to a far way in helping them to meet daily living. And when we break it down and we ask people, well, how do you spend the money you get from overseas? The large majority of persons say it goes towards school fees, daily living, putting food on the table, those kinds of situations. And therefore, it is playing a very important role in ensuring that maybe it's what is underpinning this level of resilience that we experience and that we exhibit as a people, because it does say that people are eking out an existence largely and significantly contributed to by the level of remittances that they've been getting. And this is despite the fact that, you know, countries from which we get remittances, the US, the UK, Canada, are in fact feeling the pinch as well. But happily, family members are still contributing to the welfare of and the well-being of their family members in Jamaica, which is playing a very important part in cushioning the challenges that would otherwise be far greater amongst the consumers, right? So we want to pause at that point. I know that I've said a mouthful. There's been a lot to digest, and I've gone through fairly quickly in the interest of time to allow for question and answers that we hope will be very energetic and that we'll be able to respond from the panels and from myself as we digest what has taken place from the business perspective and from the consumers. The general summary is that consumer confidence has gone up, has shot up second quarter over first quarter 2021, but we're not anywhere near the levels that we were pre-COVID. We hope we will get there, but the fact of the matter is this is a positive tick, and we hope that this will continue long term and that we can see a return to pre-COVID levels of confidence. It's too early to tell, but we're in the field, and we will be presenting again in October, where hopefully we will be able to show a continuation of this pattern that the 2021 second quarter has in fact shown. So thank you very much for listening. I will now hand over back to Andre.
Thank you. Thank you very much, Don. Excellent analysis as usual. There are so many things I observed there that I don't know where to start, and I cannot monopolize the panel. But one thing that is certain is that the situation is no worse than it was previously. Definitely the situation is no worse, but there are some inconsistencies there, Don, which I'll ask you about later. For example, the consumer confidence, as you've indicated, has shot up, while at the same time, job prospects and business prospects has not. So that is kind of an anomaly there. I've seen this before, and you can remind us when last we saw this, although this is an unprecedented situation that we're in now. That is one. But certainly the moral of the story is that the situation is not it's not worse than it was previously. The other point to note, which we can discuss after, is the concerns of businesses that they believe will restrict growth. Normally, crime is among those. And in your top 5, I noticed consumer price indices, rising prices has usurped its way all the way to number 1, and crime is not in the top 5 anymore in terms of the businesses' expectations and their concerns about the growth, which leads me to believe, Don, that this is kind of a flavor of the month kind of answer by the business people, because certainly if you ask any business person otherwise, I would have thought that crime would still be in the top 5, but let's not dwell on the negative. But it is important to look at those, because those are the things that we have to address in order to increase business and consumer confidence. So it's instructive that crime has fallen out of the top 5 and replaced from out of nowhere price increases as the number 1 factor that is a concern to businesses. We can speak about that shortly, but I want to turn to our panelists now. The question to the panelists really is, where from your sector of the economy, and we have a wide representation here. We have business services, we have transportation and tourism, and we have the capital markets. So I think we have a wide representation of our economy here. Where were you last year this time versus now? Where are you last quarter versus now? And what are the prospects for your particular industry? And do they coincide with what the survey of the 600 businesses and consumers represent? I'll ask Ms. Gloria if you could go first and just give us your perspective on the results and where you are versus last year this time.
Okay, thank you very much. Great presentation, Don.
Thank you
very
so much.
Insightful. And I can say that I already have some information from this survey that I will be sharing with a potential investor on Thursday. One of the questions was the situation concerning crime in Jamaica and political stability. Those are usually stuff that we have to answer in our due diligence. Yes, so to answer the question specifically, so last year, this time, where were we? The sector was just about rebounding from, as you know, the global services, also known as BPO sector. We were locked down temporarily in April and May, a short period in May. And we had lost some jobs. We had lost some money, of course, during that period of time. And so about this time, we were just about recovering from that lockdown. We were examining our situation. We were looking at, ways that we could recover quickly. Fortunately for us, we had already started to prepare our business continuity strategies. We were collaborating across our members and looking at the ways that we could, continue to grow and support the Jamaican economy. And I will frame basically how we have performed within a global perspective. And I'll say that, pretty much BPO is continuing to grow, 6.5 to 8.5 compound annual growth rate. And this is so because in times of difficulties, economic difficulties, of course, businesses look to business process outsourcing as ways to help them to continue to serve their customers, to allow them to perhaps move non-core activities into entities that probably have better economies of scale and can offer cheaper cost of certain non-core services like customer service, finance and accounting, certain back office services. So the COVID pandemic has really helped business process outsourcing, I would say. We're seeing increased agility in businesses. We're seeing that businesses are leveraging benefits in BPO where they probably wouldn't before to drive innovation and to utilize, disruptive technologies that are out there, artificial intelligence, big data, and so on, to help them to increase their value proposition and serve their, in a B2C market better. So the versatility of BPO, I would say, is strengthening. And the use of technology is also strengthening. I would say during the pandemic, we delivered round-the-clock reliable services to our members from here in Jamaica. And this has helped us to continue to position Jamaica as a place of choice in the global outsourcing space. The government was very supportive in recognizing and designating the BPO sector as an essential services. So even during curfews and so on, we could continue to serve our customers in logistics, in healthcare, in banking, in e-commerce, and so on. And that also helped to strengthen Jamaica's value proposition. We have spent quite a bit of money in keeping people safe, and that's important, and that was critical to us. Of course, maintaining stability was absolutely critical. So outside of moving persons to work at home, where up to 50% of the workforce was deployed to work at home, we had to maintain social distance within the site. So I would say that the trade-off to growing during that period was in keeping people safe, where we spent over $100 million additional in keeping people safe within the sites and in just maintaining protocols and keeping the workforce safe from COVID, from infections. The last survey that we did in March shows that 60% of those that were surveyed have new projects in the pipeline. And so we are seeing, you may have seen recently in the news where we have 9 new sites being built out, and that's organic growth within Jamaica. And we have several potential prospects that we're talking with now that are doing their due diligence coming into Jamaica. There's an uptick in real estate development especially in Kingston and St. Catherine. We have new sites opening up. A new site was opened up during the pandemic in St. Anne. So Ocho Rios got their first BPO. So yes, we're seeing growth, and all is not positive, I would say, because we are concerned about the workforce. and what is happening on the education side, and the fact that not everybody seems to be benefiting from the remote learning environment, and how that will affect our ability to scale as we grow, as we look to continue to move up the value chain in Jamaica and creating higher value jobs. Will we be able to sustain that position? So all in all, I think I'm I would say very encouraged by this survey to see the increase in consumer confidence. I know that we are playing our part in the contributions that we're making, but we're part of a holistic economy in Jamaica. And certainly we want to be able to see other sectors doing well and supporting Jamaica's growth. There is the decline in the foreign exchange, the exchange rates. And even though that does not necessarily affect us from a spending perspective, we're concerned as to how it will affect our employees, our workforce, and because they have to buy goods and services, of course. So that's a concern for us. Crime is also a concern for us. It's a question that we have to answer every time there is a new investor looking at Jamaica. But I'm very encouraged by the increase in consumer confidence, and I think now that we have reopened the entertainment sector and we're going into the winter tourist season in the next quarter, I think we will see improvements, even more improvements.
Thank you very much, Ms. Henry. Thank you very much. You have a direct line to the consumers because you see the spending, you see the activity on the calls that come into for the service and for the sales. So you would definitely have a global perspective on it. So that's good news. Mr. Townsend, sir, I note that investment plans among the transportation sector, 51% plan to increase expenditure. And certainly, as Ms. Henry just mentioned, the tourism and entertainment sector would have had some benefit to your sector as well. But where were you last year versus now, and earlier in the year versus now, and what do you see on the horizon immediately that will help us to propel ourselves forward?
Morning, Andre. Morning, everyone. Nice presentation, Don.
Thank you.
Very interesting. And from our perspective here in the discretionary transportation sector, or travel sector, it's very findings I find very logical. Where we were a year ago, the second quarter of 2020 was probably worst ever in history. I mean, in order to make our customers and passengers safe, we actually stopped operating for a couple of weeks. And in that 7-week period, we outfitted our coaches, in our case, with air purifiers, put in all the necessary protocols to start safely. During that period, of course, the needs of our passengers accelerated in the movement of goods. So our courier service continued, and that has grown tremendously in this period. Looking at that consumer and the business confidence, I can follow it because, for example, in the fourth quarter of 2020, one saw an uptick in business and travel, and then there was a slight pullback. The measures weren't loosened. Internationally, there were some concerns about the third wave of COVID, and it was muted again in the first quarter of 2021. And now we're seeing the best, ever since COVID has started, now we're seeing the best results. And it follows, I think, with the business and consumer confidence going up. From my perspective, it's not where it was, obviously, business is not where it was, but I think it's partially due to what's happening in the travel sector and entertainment sector, where it's literally some parts of the sector are coming from zero. In this side of the island, a lot of car rental companies, tour companies, attractions, and so on were virtually closed. And folks, great things have happened. The beginning of this year, a lot of jobs have come back and started to roll back, and you can see it. Not where we want to be, but it's coming nicely. In our case, in discretionary travel and transportation, there's still a lot of rolling stock that's not fully utilized. So I think that when I look at that slide in terms of the investment, increased investment 2021, it might be more to do with storage and communications or transportation of goods. But as far as the rolling stock is concerned for passenger transport, there's still a lot of rolling stock that are not fully utilized. And so we're beginning to see a redeployment of a lot of vehicles. In our case, for example, we would have no need to have a significant investment in rolling stock in this next financial year. We look at it going forward. We think it's a time where you have to innovate. As Sherry had said earlier, using technology, more contactless business. So in our case, we're seeing a lot where the same customer that we facilitated when they're going to university that traveled with us, now that they have their business running, we're being used as a supply chain, and we're digitizing a lot of what we're doing so that to make the movement of goods even easier and more contactless and so on. So I think a lot of businesses have to look to doing that, you know, and packaging what they're doing, offering it online in a more creative way.
Yes.
We are optimistic, like other businesses are very optimistic. The human spirit is such that when things come back, you really do feel optimistic. It's understandable that the business confidence is unpredictable, and I think that's all down to COVID. In that we're in an unprecedented time. We've never been in a situation like this. We don't know the outcomes. We feel confident, and we're buoyed by what we see, I think, in some of the first world markets, the US and so on, with the rates of vaccination they have. And thank God for that, because the US market has allowed Jamaica's tourism to rebound in a big way, especially the VFR, visiting friends and relatives, part of the market that has come back really strongly. And so I think a lot of it is down to COVID. A lot of the fear of price increases is down to COVID. As you can see, because of COVID, international shipping prices are up, cost of oil is up, all sorts of stuff are happening. And crime is still a factor, but if we don't tame or improve in terms of COVID, it'll only make that, will only make crime worse, right? So the topic is tackling COVID.
Okay. Okay.
And that's my take.
Thank you very much, Oliver. Very good analysis there. Mrs. Street Forest, on the ground in the capital markets, what is your perspective last year versus now, and where you think these results, indices results, will lead us in the short term, medium term?
Andre, let me just first say that I am just happy about the positive report that Don has given in terms of the consumer and business confidence. We do know that it is not a trend, but at least it gives you that feeling that things are happening, and it is good that it intersects both the business confidence and consumer confidence. You know, they have intersected somewhat, so that we know that persons are sort of moving in the same direction in terms of thoughts and actions. What we have seen in the capital market is really agreeing with the poll result that Don has. We have found that within the last quarter, you can see even month by month, a choppiness in how the market performs. And it is, I think that it is that way because people are responding to every news that they get to make a decision. There's still uncertainty in the market, so people are looking at that. But let us look also at the business, the real business confidence, and persons who are deciding that despite COVID and based on what is happening, they are going to invest. So what we are seeing is that the APOs are being put to the market, they are successful. The IPOs are coming out, they are being successful. You know, we have the private debt market, again, there's success there, and even preference shares. So you can see that there is that thought that we must continue to raise capital, and also that this capital is going to be used in an effective way in terms of growth of business. The fact also that investors are responding tells you that, yes, there is an anticipation that the future market conditions are going to improve. Now, when you look at that, so that part of the business tells you that there is no future growth, and it is probably expected to increase, you know, as the quarters, the next quarter and beyond. But when we also look at first quarter in terms of the number of accounts that we have opened for investors, that has increased over the last quarter. So it really says to you that, you know, investors are coming back, and even new investors are coming back to the market. It is cautious though, because when you look at the value and volume traded, it is still, especially for the main market, less than, say, last year this time. It is less. But the number of transactions, which means that people are coming back, but it's in a smaller way that they are transacting. The number of transactions on the main market, that has improved over last year, this time, and over quarter one. So it tells you that, you know, there is sign of movement, but cautiously. The other thing is that in terms of the value, the consumers are those who drive the price based on what they see. The pre-COVID, at COVID, there was a depression in price. That's the value. It has not yet translated quickly to where it used to be. So that is why we are having also the value down. However, we are seeing something that is significant, and that is the performance of the junior market. We are seeing a totally different trend here. And I think probably it is looking at future performance, and just the fact that that market has a more wide variety of sectors in it. So we see the number of transactions up by 41%, the volume up by 37%, and the value up by 31.8%. So it shows you that, I think, you know, in analysis, that persons are beginning to look towards that sort of sector of the economy. And when I looked on Don's graph, I saw that the service industry, there is much more of a move, positive move, and an expectation of positive move. So it tracks it. I'm seeing that there is very much confidence. I think that the confidence is going to be dependent on the news that comes about COVID, or we are tackling it, or the first world is doing. I'm concerned about the variant, Delta, that it does not derail second quarter's positive results. But I think all in all, what the indices are saying is that there is improvement, and that people are coming back to market, whether to raise capital or to invest. We are also seeing a renewed interest in really people even asking, companies asking for broker-dealer license. So what that says to you is there is hope, and people are now positioning themselves to service to do provide service for the investors and also to grow their business. So that's my take on it at this time.
Thank you very much. Sherry, there's a real estate question in the chat that I'm going to give to you shortly. But before that, Don, that other services that is at the bottom of the chart that Mrs. Forrest mentioned, and you said an example of other services there is personal care. What makes up that sector of the economy that seems to be so bullish with the 30% difference in the level of investment, 21 over 20?
Right. What you see is the Andre, where you have a relatively small sector and you see a shift, those percentages are going to be greater than you're looking at the banking sector, for example, where a marginal shift is not going to be as significant in terms of percentages. So we're talking about hairdressers and people like those offering services are probably a couple of them may not even be registered, but persons in that category. And because of the fact that there has been movement that has been noticeable, that 30% reflects far greater than, for example, in movement within, say, the financial sector, which is a much bigger sector, and where movement is generally expected to be relatively marginal in terms of the percentages, okay? But it's more personal care, you know, hairdressers, barbers, and those kinds of persons who are in this particular category here. Relatively small.
Gym membership as well, I would assume.
Personal care, absolutely. Yeah. But I want to make a point, and you haven't asked me the question directly, but you made reference to it earlier in terms of the importance or the relative view of businesses with regard to crime. I'm going to make a very unfortunate statement. When we do something like the corruption surveys that we do quite a bit of as part of the global barometer surveys or whatever, what comes out is that consumers say that corruption is a way of life. All right, so things go on, life goes on, but corruption is a way of life, and there's a certain level of acceptance. In the survey, it's not that crime is no longer the number one factor, but the questions that were posed are two different questions. The question that was referenced was, you say the economy is going to get worse. What are the factors that are going to impact the economy? Separate from asking businesses, what are the things that impact you most? And here, 51% of the businesses say that crime is still easily the most significant deleterious factor impacting my business, crime. But you know what? It's like how the consumers view corruption. For them, they're not seeing any major solution taking place. It's almost a way of life, and they've accepted that. But the data does say that 51% of the businesses indicate that crime is still the major factor impacting their business and their business success. Okay. The number two, incidentally, is now education at 11%. And obviously, because of the virtual learning environment that we're now being experienced, there's no question that consumers and businesses are feeling that this is a very difficult environment within which children can learn. And this is coming up as the number two factor that will impact businesses, because in the long term, it will impact how they're able to attract persons into the labor force in the long run. But crime is still the number one factor impacting businesses and how businesses perceive their future. But again, because COVID is very current, you know, a lot of mention is being made of COVID and the impacts that COVID is having on their businesses. But crime is the number one factor impacting businesses and their success. I just wanted to make that point clear.
Okay, thank you very much. Sherry, the question in the chat is relating to, well, if I look at Don's chart, the investment in real estate has not moved. The intent to invest in that sector has not shifted greatly. The question in the chat, however, says, with the real estate climate where it is, would you consider it a bubble? Prices are really high in some quarters, and it seems to be a seller's market. Based on what is happening and the demand on your side, Sherry, is this a trend that you believe will continue?
But I don't want to make any predictions on whether it's a bubble or not. I think we will continue to go with meeting the demand for mortgages, which we continue to see at a very strong level. When we assess what are the reasons for that, you know, there is clearly a sector where more affordable housing at a certain price point, you are seeing a demand for homes, and this is for personal, you know, private
Yes.
property in terms of you're living there. So there's definitely a demand, a continued demand, and I believe I would have read recently where we do have a shortage of affordable housing solutions, and you know, whether through public-private partnerships with NHT or otherwise, you know, you continue to see the government promoting the need for us to have affordable housing. But there's also another level where we're seeing mortgages and demand for financing for homes for investment purposes. You know, we see persons wanting to acquire property, whether it is for vacation or, you know, investment for rental. You know, there is that still demand is still there. So we continue to monitor the space. The quality of the financing we've offered to date has been good. So we're not seeing any fall off in terms of the type of loans and whether those are being serviced adequately. And we continue to see strong and robust demand for financing for real estate. And you can, when you drive around the country, you can see that there doesn't appear to be any bearishness. It's actually quite bullish in terms of the kind of construction. And so while I don't have a prediction on the bubble, I believe we're still seeing good quality credit in terms of persons coming in and being able to demonstrate their ability to acquire these properties. You know, somebody said it's a seller's market. You know, what happens, just the average, you know, demand and supply, you will find that there will be a stock of homes that after a while, maybe, you know, prices will come down because we have an oversupply. I don't see any indication of that yet. And so I don't have any prediction on the pricing that could in fact affect whether there's a bubble or not. But we continue to see, you know, a steady but sure demand for persons at both levels, from personal and from investment to acquire mortgages for real estate.
Thank you very much, Sherry. There is, I saw the statistic concerning the reliance on technology. That seems to be a growing trend in the last 12 months, obviously, because of the pandemic. And some institutions, in some businesses have been able to capitalize on that technology, on the reliance on technology. Mrs. Forrest, has there been any increase in the use and the reliance of technology first in your sector? And same question for Sherry. Is there are there more consumers now relying on technology to do their business?
Well, as you know, Andre, that how we operate as a stock exchange, you can readily stay at home and do most of your transactions, whether with the broker or otherwise. But specifically in terms of our online trading platform, what we saw was a real shift in terms of the transactions going through that platform during the pandemic. And even now, we see that persons within the age group of 18 and over, and a lot of adults, when I say adults, I mean those who are over 50, they have now gravitated to the online trading platform. So it is good that we had that in place prior to COVID, and we are doing much more in terms of ensuring that with technology, we satisfy the needs of the customers. So quite recently, we have been encouraging persons to open their mandate accounts, so that even where now you receive, some persons still receive their dividends based on a check coming in the mail. What we have said, because we have the technology, do otherwise by ensuring that you give us the necessary information so that your dividend payments and all of those can go through directly to your account at the bank. So yes, we are relying more and more on technology. And even where it is that we have our listed companies, quite recently we have said to them, look, here's a portal. Upload now, effective the 26th of this month, we are saying, upload your information, your messages, your financial statements via this portal. So there is less of a touch, there's there's an increase, because there is increased advantage in terms of efficiency when you employ technology. And so the stock exchange is moving more and more and more towards doing that. We think it's offering a better service to the client. And in cases such as this, you know, it really helps business to continue to be effective.
Sherry, same question. Is your business growing in terms of the alternate business channels? You too, Oliver, I'm wondering if you guys have any uptick in business coming through the technology channels. Sure.
Sure, right. So I think it's there's no doubt that we've been going through a digital transformation for a number of years, and people will tell you COVID just simply accelerated it. So out of necessity, we had to think about alternate ways of accessing goods and services. So there's kind of like a push and pull strategy happening now, where, you know, certainly in the financial sector, you're seeing more of the players offering opportunities to interact online and to provide self-service, you know, or even just planning better for what you would typically do. So, you know, you typically go to a bank and open an account. We're saying, no, you know, start online or set an appointment so that you can manage how you come in and interact. But you're also seeing a lot of businesses out of necessity, and I'm sure Oliver can attest to this, wanting to give their clients this option of doing business online. And so there's no doubt in my mind that that demand for digital enablement is going to continue. The question we have to ask ourselves is, I think as Marlene just mentioned, are all of our constituents ready for digital interactions? And at NCB, we believe we should leave no customer behind. And so even from the perspective of our seniors, you know, there has to be specific allowance for how we help them to think about doing things differently. And that is in the mix, along with our more, you know, digital natives, far more tech savvy and comfortable and questioning. Like, my daughter will never go into a bank. She's like, why do I need to go into a bank? That's crazy. You know, if she's gonna book Not So Express, she's going to say, I'm not going to call. I just want to go online and make a reservation. And thankfully, Oliver already has that in place. And so we're seeing a lot more businesses having to think about all other ways for their products and services to be accessed. And the digital enablement is obviously important. And that's why, from an e-commerce standpoint at NCB, we want to give them that opportunity. So this whole business, as I said before, of how do I get my goods and services online? I think about a website, and I don't want to think about that. We have to find different ways to afford businesses to meet their customers. And so no website, social media payments, WhatsApp payments, you know, or you want to go full-blown website, no problem, with properly enabled e-commerce solutions. It's all possible. So Andre, I'm saying yes. It's not going to change. It's going to continue to grow in terms of digital interactions, and the ecosystem is already quite formed and mature. The government has signaled its support in a big way for this. And so I think with all that enablement happening, that ecosystem will allow for better transactions more efficiently and certainly more conveniently.
Thank you, Sher. Oliver?
Yeah, totally agree that that trend will continue. And vast majority of everybody they're using mobile devices. And I think this last year or so, pushed a lot of people in that direction. You know, you can't physically move, so you have to go move things digitally, order digitally, and we are certainly investing a lot of our time and resources there. And we're seeing a big uptick in people using, our customers using the chatbot, booking via WhatsApp, via the internet, and it's only going to increase. And therefore, we are even seeing how our whole digital, we're going to build out our digital platform where we can reward customers, give them points towards travel on the buses, but also when they're sending packages and all that, and merge that all into one, you know. And yes, it's only going to continue, and it facilitates. People are expecting that. Our business partners, a lot of businesses that sell on Instagram, distribute stuff. Their whole platform is digital, and we have to enhance their ability to sell, and we'll be certainly matching that. From what we see also here in the travel industry, a lot more stuff is happening digitally, bookings for excursions and all these things. And that will only continue.
Okay, thank you very much.
May I come in here, Andre, just to again add to what both Sherry and Oliver just mentioned, and of course what Marlene just said, because based on the survey data, mobile devices are now providing the greatest support during the pandemic. That's the data.
Yes.
Right? Asked to indicate what they're relying on most since the pandemic, mobile devices are most widely identified by 70% of all persons interviewed. It does corroborate what everybody has said. I just wanted to show that the data is there to substantiate what everybody has said so far, Marlene, Oliver, and Sherry.
Ms. Gloria, I want a comment from you on this too, because consumer confidence is affected by the lack of jobs. I'm sure that we could increase the employment in your sector of the economy if there was another way to utilize the technology, where people would have to come to a physical venue to do the work. We know the security risks in the BPO industry that warrant gathering at one location to service the customer. But what is being done to sort of diversify your product offering in that regard using technology, if any?
So I'm happy you asked that question, because virtual work, remote work is what has saved us in this pandemic. We were able to use that. So virtual work is really part of most companies now globally, their business continuity strategies. Previously, you would move to another location if there was a disaster somewhere. But COVID pandemic has showed that that would not work in a global pandemic. And so people had to pivot to work at home, remote work, or whatever remote methodologies that is used in different countries. That is what has saved us. We were able to move 50% of our workforce at one point to work at home. Some companies doing as much as 70%, but overall in a sector-wide, it's about 50. And we have been advocating since then for this to be embedded in the policy. So many of our operators now operate within the special economic zone, and their incentives are applied within the SEZ, which recognizes a physical geographic location as the special economic zone. And so it is why we have advanced the government to consider work at home as part of the legislation for Jamaica. It will certainly improve our value proposition. It will improve our ability to, be globally competitive, and it will help to reduce costs. And we are using technology to ensure safety, connectivity, reliability, and to just manage quality within the work at home environment. So employees who are deployed remotely, they connect to their physical site using VDI, virtual desktop, and that allows the companies to manage, the customer on the other end, their expectations, their interactions, and most importantly, the safety of, the integrity of what is being transacted in that remote environment. So for us, technology is critical. We're using data analytics as well to look at, how things are happening, what is trending, how people are responding. We're measuring, measurement is what drives us in this industry, actually. We, look at work-life balance, we look at attrition, we measure pretty much everything. And that does not change in a remote environment. So pretty much I would say that we are heavily reliant on technology. And just to extend this discussion a little further, I think as a country, we've talked about STEM a lot. And, most of what we have been said is really, I would say, narrative that has not translated into outputs, tangible outputs through the schools and the graduates that we're seeing coming out of high school. So I think we really have to step up the discussion and really how it is that we are dealing with STEM in the school, so that we're not left behind in this advanced technology-driven environment.
Thank you. Before I close the technology topic, we have two more questions, but I saw Dr. David McBean online, and he is one of the strong advocates of the use of technology. So I was wondering, from the Mona School side, what is happening with the technology from the side of the business and of the students particularly, and how has it, what effect has it had on the growth of that sector of the economy, and what you see going forward?
Okay, thanks, Andre. So, like for most people, it's been a mixed bag, because our infrastructure would have been built around face-to-face delivery with limited online, and we had to pivot to go fully online in less than a month. And a lot of that had to do with training. We had a lot of the systems in place, and I think this is one of the things we learned, and also interacting with our partners, is that most people had pretty much 90% of the pieces, but you didn't have the processes, nor the will, nor the impetus. The impact on students has been mixed. A lot of it has to do with access to the internet. For education, cell phone is not the greatest way to engage in teaching and learning for a student, because if you think of that small screen and trying to learn from it. We also found on the lecturer side that we had to find new ways of engaging students, because again, we're used to looking at a lecture theater. You can pick up nonverbals, you see puzzlement on students' face, you see a cohort suddenly start animatedly talking among themselves, and use those as markers to find out whether or not you're connecting. We've had to do everything from whether it's taking payments, signing things digitally. So all that we've had to move pretty fast, and the genie is out of the bottle. We have students now who are in remote countries who are saying, hey, we want to do certain programs with you, but can you guarantee me that you'll be online for the next 2 years? So while it's caused some dislocation, and for example, for some students from deep rural areas, particularly at the undergraduate level, it's opened us up to other markets, outside of Jamaica geographically. So for us, it's an opportunity. I'll close by saying this. My real fear is that we're still treating digitization and digital transformation as a little bit of a novelty, and the challenge, I think, is to embed it in our core business and challenge why. So I think government has an opportunity to take the lead along with the big private sector companies. If you know me and I have a login and I need a new account, why do I even need to come into your branch physically, or send you the original paper signed with wet ink for you to know that it's me? And I think as we go through this, because we're never going to go back to where we were, those are some of the fundamental things. And I think from academia, we need to kind of codify and push these things as well.
Thank you. Thank you very much. Last question. And I probably give this one to Don, and maybe Sherry can comment as well. Oh, by the way, Sherry, there's a customer service opportunity for you guys in the chat. The question is, what impact, Don, has the informal economy had on our resilience during COVID? In doing your research and in doing your interviews, how do you see what percentage of the positivity or the progress has come through your discussions and your discourse with the members of the so-called informal economy, and how resilient do you see them as being a part of the recovery plan?
You know what is taking place? There's been a kind of smudging of the occupations, if you wish, because what they COVID pandemic has done, obviously, we know that there's been significant job reduction. People have lost jobs and so on. What this has done is actually forced a lot of people into the informal sector, whether full-time or part-time. And therefore, a lot of people are hustling, a lot of people are finding second and third jobs. And what we used to call the informal commercial sector at one stage, which we could identify, even if they weren't registered, we could identify them. What is happening now is that a lot of other people have gone into that sector by virtue of the need to just survive. And there's a smudging therefore, because you probably would have associated at one point in time the informal commercial sector as being maybe equivalent to a low-income kind of person. Now we're finding that persons, by virtue of job losses, have gone into that sector because they have to survive, you know? And COVID has obviously been a major factor for all of them. And as a result, we find that there are challenges that are now consistent and similar across those who were part of the original informal sector and those who have been forced into the informal sector. They all are facing the same kinds of problems and hoping that this COVID thing will vanish tomorrow. It's a major problem.
Okay.
No question.
Okay. Yeah. The challenge for the commercial bankers is to formalize these persons so that they can be comfortable lending them money and helping them to grow. So that
put another way, you know, it has spawned a fair degree of entrepreneurship. This is what it really means. The people are getting into businesses to survive.
Yes. I see Ms. Henry nodding too. Yes. Any comments, Cher?
I would endorse what Don is saying as well. And so, as I said before, that's why we have to get more creative with our solutions and options. Yes. Financial inclusion is important, and it's not for customers to necessarily meet our requirements. Those requirements are important, but it's for us to meet them in terms of offering ways where they can, in fact, be brought into the banking sector. And I think that's what we've done. Just last year, we launched an account where you could just open it with $100 and your TRN. We call it a low-risk account, but it does allow for the underbanked and the unbanked to come into the formal system. So examples like that is as David mentioned, you know, public-private sector partnerships, understanding of our ecosystem, such that we in fact create that space for persons to be able to do business.
Okay, thank you. And Oliver, maybe they can use the Knutsford Express to move their goods from customer to manufacturer to retailer at some point, eh?
Oh, 16 spots around the island and increasing.
Wonderful. All right. It's been a wonderful session. I have the wrap-up signal was at 10:45, so I think we're right about there now. So I just, in closing, really want to thank everybody for the participation. We have 163 people here and probably another couple of hundred on YouTube. So we thank you all for your participation. Thank you, first of all, to our sponsors, National Commercial Bank, NCB Capital Markets, and the Jamaica Stock Exchange. Thanks to Sherry for welcome back to this forum, and we're happy to have you back with us. Excellent presentation. Anya as well, on point as usual with the capital markets. Special thanks to Executive Chairman of the Market Research Services, Don Anderson, continues to do the heavy lifting for us in terms of putting this all together. And to our panelists who agreed at short notice to join us, Oliver Townsend, Chief Executive Officer, Knutsford Express, Ms. Gloria Henry, President of Global Services Association of Jamaica, and of course, Marlene Street Forrest, Managing Director of the Jamaica Stock Exchange. Thank you all very much for your participation. Have a productive day, and we look forward to seeing you at the end of the next quarter. Thank you very much. Have a great day.
Bye,
thank you very much. Great job, Andre.
Take care.
Yep.
Bye.
Thank you, Gloria.
Thanks.
Bye.